Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. I hope you are having a fabulous day. Just a while back, we got economic releases data from, oh sorry, there is I think Skype call. Okay, it's disconnected now. And in that release, we got a slew of economic reports for the United States. The unemployment benefit claims were lower than expected, and it initially caused spike in the US dollars. But dollar is now giving up those early gains, and it is settling to where it was prior to the release. So there is a interesting development, and let's see how things are shaping up as we are getting closer to the start of the North American trading session. There is the USD JPY chart with the each candle period defined at 5 minutes, and I have added the SMA 12 and SMA 24 to get the average price prevailing over last 1 hour and 2 hour respectively. And we also have this donkey on channel 24 and 48 in place to get the range for last 2 hour and 4 hour respectively, so that we get the timeline of the rise and fall, and we can then compare who is having the better momentum on which side. So if we consider the USD JPY chart, it has been making higher highs and higher lows since its turnaround at the start of the European trading session. So now this is going to be interesting to see if it is going to dip below this immediate swing low or if it is going to sustain this spike. And as of now, at the moment, it seems like it is more likely to give up these gains and go on to make a fresh swing low. It is not really far off from this immediate low. It is just 10 pips off from that low, and the momentum seems to be shifting. Let's consider the hourly chart. For the USD JPY, the 130 level is likely to act as the resistance in near term. So that's where this today's session saw the USD JPY struggling, and the spike indeed pushed it higher, but it couldn't really sustain, and it again seeing fresh selling pressure. And my expectation is that maybe in a day or two, it is again likely to go on toward these prior lows. If it is going to do it today or not, that is a open question because we can't really time the moves. But the larger trend is still bearish for the USD JPY. So if it fails to rise past this immediate swing high established just little above 130.5, then I think the things are likely to turn more bearish and push the USD JPY below this immediate swing low. So that is the medium term perspective. But for immediate trend, we have to rely on these lower time frame charting. And here the momentum is not exactly bearish. I think it is more likely to consolidate where we can exploit this range as the USD JPY is finding resistance closer to 130. This is the level where we can keep looking for short selling opportunities while expecting it to stay in this range of around 40 to 50 pips. Even if it remains in range, we can still benefit, we can still profit. But then the question arises if the USD JPY is the best bet or if we have better opportunities elsewhere. And for that, the best thing we can do is start doing the relative comparison. For Euro, the momentum has been bearish, but it is not overtly bearish. It is simply struggling to cross the 1.09 level. It has been the same story for last couple of days. It has been holding close to this level. It hasn't really found a big move beyond that level, but it is not that bearish. And even in today's session, even after the strong economic release for the US, we saw that the euro has been able to again climb up from these lows. So that is a signal that the momentum is still bullish, the bias is bullish, and the phase is of consolidation. So all we can do is keep looking for buy on dips trade here in euro USD. And if the euro is more bullish or if the JPY is bullish, then that question arises. So we have to then compare with this timeline of the swing low and swing high formations in mind. So for euro, the day's high, prior high came in at 1.093 at 8:55 GMT. From there onwards, it started to make these 4 hourly swing lows. Let's compare this with the USD JPY. For USD JPY, the turnaround started early, so the JPY is less bullish, you can say, or more bearish compared to the euro in today's session. So for trade to be taken with the expectation of the dollar to weaken, the euro is going to be simply a better bet, simply looking at this timeline of the events, as the JPY appears to be on the more bearish side. And if we look at the immediate price trajectory, the Euro USD has gone on to make this immediate swing high, 4 hourly high, while that has not been the case for USD JPY as of now. So the JPY is lagging, and we have the better opportunity to go with the flow in the euro compared to the JPY. Now let's compare the euro's strength with the other major currencies trading against the dollar, including the Great Britain pound, the GBP, and NZD, AUD, and then we will have to invert the scales and look at these other currency crosses of USD CAD and USD CHF. Let's do it one by one with AUD first in mind. The AUD seems to be much more stronger compared to the euro in today's session, as it hasn't really gone on to make these new lows on the lower side, and it has been quick off the block to rebound from these immediate low also. So for a buy trade in these major currencies, the AUD seems to be the leader of the pack in the three currencies which we have seen so far. Let's consider its hourly charting. For the hourly formation also, the immediate low is quite higher compared to the prior low. That means not many sellers are willing to bet on the downside of the AUD. As a result of that, its price is not pushing much on the lower side, and it is holding very well close to this immediate swing high. So all in all, AUD is apparently much more bullish than the euro. So three currencies which we have seen so far, the AUD seems to be the best bullish bet against the dollar. Euro is following it, and then comes the USD JPY. So even though the USD JPY has a resistance closer to the 130 level, the momentum is not that strong, and here we have better opportunities emerging in these currencies while trading against the dollar. Let's see the story for GBP. GBP has been consolidating with a slight bias on the lower side. If we compare the hourly charting of the GBP with euro, the euro has made a swing high which is slightly higher compared to the prior swing high, but that has not been the case for GBP. The GBP is still below this prior swing high. But let's consider the intraday charting. On the intraday, the turnaround for the GBP came in late. GBP made these highs later than the euro, and this high, let's consider this immediate swing high. It is happening after the high made by euro, but one thing is there for GBP, that it is pretty much closer to this immediate swing high, but still it is apparently on the less bullish side compared to the euro. So we still have the better opportunity in euro for any buy on dips trade, and even better than that is coming our way in AUD. So I would say that if we have to go for the trade with the expectation of the dollar to weaken, then the AUD is still a better bet compared to all these major currencies. And if we are expecting the dollar to strengthen further, then the USD JPY seems to be a better choice. But before we can finalize, we can say that that is the best combination to work with. we of course have to consider other major currencies also. And NZD is also apparently on the stronger side, but not so much as its other Asia Pacific peer of AUD. AUD has made a newer swing high. The NZD is yet to get there, but it is rebounding sharply, and it has also shown these immediate turnaround from the lower levels of 0.647. So, taken this factor in mind, I think we have to place it ahead of the euro, the GBP, and of course the JPY, but it is less bullish against the dollar compared to the AUD. So, it has to be placed behind the AUD. Now, let's see the story for USD CAD. And CAD seems to be a interesting currency. It is going from strength to strength. Earlier in the day also, it wasn't really showing much weakness with the USD CAD holding closer to this high around 1.340, and from there on it saw this selling pressure twice, and now after the US economic release it didn't really rise much, and then this decline started, and it is apparently the strongest bait. Let's compare if it is even stronger than the AUD. So for that, the immediate swing high has to be kept in mind and compared with the AUD USD swing low. Oh, it's interesting here. It is around the same time. But if we look at the immediate swing low formed for the AUD, there was sharp move on the lower side, and that didn't really happen for the CAD. So we have to put the CAD even in a better position than the AUD. So now we have to change the ranking, and here the momentum is strongly bullish for the CAD against the dollar. So we can expect the USD CAD to continue to decline, and this will be a better instrument to trade with the flow. If you expect the momentum to sustain, momentum to continue, then keep looking for the opportunities to go short in the USD CAD. So whenever there is some correction or consolidation without the USD CAD showing any signs of rising too much too fast, then I think we can go for further short sell trades in the USD CAD, as it is apparently one of the strongest instrument currency cross to trade with this bearish momentum. And before we can be sure about our assessment, we have to consider the USD also. USD is also showing the signs of decline, but it is not that strongly inclined on the lower side, so we will have to put it in the middle of the pack. So in today's session, the USD is the least bearish currency instrument. So if I were to simply consider the strength of the JPY against the dollar, I would have to say that JPY is the least bullish currency against the dollar in today's session, whereas CAD is the most bullish currency against the dollar in today's session. So keeping this factor in mind, we can work with the various currency crosses and determine which particular instrument to trade with and which instrument to wait for better opportunities elsewhere. Now, yeah, it seems to be the case, Janice, as CAD has appreciated a lot, and it is the best currency in a bullish environment to trade against the dollar. So that is, I think, clearly the cause here, though we can only say after the fact, as the market seems to move early, and after that we assign the reasons to it. Now let's take a look on the equity segment. The Dow is consolidating with the slight bias on the bullish side. If you consider its hourly charting, in yesterday's session, this turnaround happened after this low formed just little below 33,300. From there on, it showed this sharp move on the upper side, and then this extended consolidation as This consolidation is without any significant correction. I would expect the momentum to last in today's session also. So all we have to do is keep looking for buy on dips trade in the Dow Jones Industrial Average. And if we have to trade with the Dow, or if we have better opportunities in other major indices for the US, for that we will have to do this correlational assessment. So let's consider the timeline of the rise for the S&P 500 as well. The S&P 500 seems to be gaining ground, and it has risen more than half a percentage point from the immediate swing low. Let's compare it with the Dow. The Dow has also risen, but its gains are slightly less than half a percentage point. So if we simply have to consider the magnitude, the S&P 500 seems to be on the leading side. Let's consider the hourly chart as well. There is not much of a difference in the hourly charting. It has passed this prior swing high, so that's an interesting development here. And that is the same story for Dow as well. So there is not much of a difference. Only the slightly higher volatility is there for the S&P 500 in comparison to the Dow Jones Industrial Average. But Nasdaq seems to be showing significantly more rise. So we will have to go with the flow and prefer Nasdaq to trade with instead of Dow and the S&P 500, as it is more volatile compared to the two other indices. And also, if we look at this timeline, it is almost identical. So simply on the count of volatility, given the fact that as a trader, all we want is our instrument to move higher or move larger points. So for that, the Nasdaq can be preferred, as it has shown this higher volatility, and there is not much of a difference otherwise in these major equity indices for the US. So in today's session, this immediate momentum is on the higher side. So after the start of the US session, if we see the equity indices not dipping much on the lower side, and if it holds closer to this prior swing low, then I think we do have the trade to be taken in this environment, and for that the Nasdaq can be given the first preference. Let's consider the European equity indices also before we wrap up the session. The DAX is not that bullish, as is the case with US equity indices, and as there is not much time left in the European equity session, it is better to avoid it and not really go for any buy trade in this situation. Though if we look at this larger picture, it is still of the bullish inclination. The consolidation is ongoing with the bias from the medium term perspective on the bullish side, but it is less bullish compared to the US equity indices. So for any buy trade, the preference is with US equity indices. And let's consider the FTSE. FTSE 100 is also much more bullish compared to the DAX. So in today's session on the equity side, only DAX is showing the signs of bearishness. Otherwise, all these four major equity indices are on the rise. The European equity indices were not that strongly bullish in today's session. This was a day of this consolidation with the slight bias on the bearish side till this turnaround happened after these economic releases coming in for the US. And for the US segment, we have these strong moves in place. So that is reinforcing our prior technical formation also. So as per our correlational analysis, we have much more clarity now with the Nasdaq being the most bullish equity index to trade with, whereas DX is the least bullish equity index to trade with. And if we look at the how major currencies are trading against the dollar, then the CAD is the highly bullish currency trading against the dollar. So all we have to do is keep looking for the short selling opportunities while paying immediate attention to its price moves. And if it doesn't really show much rise, and if it consolidates with a shallow correction, then we can indeed go for a new trade. At the moment, if we go for the trade, it is now going to have increased risk and reward ratio. So that is something to be kept in mind. Otherwise, the immediate price trajectory is, of course, on the lower side. So that's my assessment looking at these relative moves of the major forex currency crosses and also the equity indices. So if you are happy with the assessment and if you are looking to trade with any of these trajectories, do let me know in the feedback and I would be more than happy to take the discussion forward. Now is the time to sign off, but before that, I would also like to remind that we have further material available on the Dukascopy Analytics page. The market coverage reports are there, so you can check it out. We also have our page on the Facebook, so you can reach out to us there and join in the conversation. For trying out the newly released trading platform, the link has been included in the bio, so give it a try and let me know how it works out for you. So thank you all for joining in. Have a fabulous day ahead, a profitable day ahead. See you next time around. Goodbye.